All right, the fastest 3 minutes in Atlanta real estate. This is Steve with the Malone Realty Group EXP. Your 3 minute market update. Two things that you need to know about right now. Number one, the number of buyers in the market finally coming back up. Okay, coming out of January, the number of pending sales, it's the sales that are under contract, actually up about 36% from where we were in December. It's the highest month over month percentage jump since the beginning of the pandemic. And it's on par with what we typically see December into January. So we're on our way to having hopefully a decent spring because we see this during those good springs. A big jump January coming out of December. Let's see what happens as we head February coming out of January. But the other thing is shows per listing is way up. The number of people looking at every single listing is up 62% January coming out of December. There's a lot more buyers out there. And also the months of supply is down to 1.9%. That means people are buying houses. We're not adding many more houses. That's all indicating that we're setting up for a robust spring seller's market, but the buyers are out there. So that's what we're looking at right now. That is all kicked off by, and it's all driven by the fact that the interest rates are finally trending back down. But if you've been with us and watching our messaging over the last couple of months, what we've been saying is the interest rates are going to be trending down. They're going to be trending down this year, but they're going to be hiccups. Okay, it's not going to stay all the way down. There's going to be hiccups. We've seen some hiccups in the last couple of weeks because a couple of weeks ago we had interest rates that were actually, some places you get a 30-year fixed loan for upper fives. Not anymore. Rates have come back up in the low, most places mid sixes right now. So the two things that have driven that, number one, the unemployment rate is way low. We had like the lowest unemployment rate in like 50 years coming out of January. When you have an unemployment rate that low, that's great news because people need to work. But the feds are trying to slow the economy down. The feds are doing that by raising the Fed funds rate. Okay, that is trying to break the economy a little bit, trying to slow the economy down. Mortgage rates are kind of tied to inflation. If it looks like inflation's high, the mortgage rates are not going to do anything. But if inflation looks like it's coming down, the rates are going to come down and follow the inflation. Okay, so with the unemployment staying low, it doesn't look like the inflation is necessarily coming down as fast as everybody wants it to. The other thing is the CPI, the Consumer Price Index, measures inflation. It's down year over year, but it's not down as far as everybody thought it was going to be. It's a little bit higher. We got that report earlier this week. That too has kept the interest rates way up. We're going to be watching. Again, there's a trend downwards and there's going to be bounces. We saw a big bounce this week. We're going to be updating you, walking you through it throughout the entire spring. Keep up with us. This is Steve. 3 minutes. I'm out of here.